Okay, thanks. Thank you all for joining today. Looking forward to today's webinar. Welcome everybody. My name is Guy Rubin. I was the Ebster founder, and I'm now the managing director at Fullcast. And I'm delighted to say I'm joined today by Sam Jacobs, CEO of Pavilion. We
Hi,
aren't here
Guy.
today. Hi, Sam. How are you doing?
I'm well. I'm glad to be here. Honored, in fact.
Well, it's good to be on this session with you. I remember we did the same last year, and yeah, looking forward to discussing how the data has changed.
Absolutely.
So we aren't here to talk about go-to-market theories or survey opinions. Instead, we're going to look in deeper into the 2026 State of Go-to-Market benchmarks built on quantifiable data sourced from $78 billion worth of pipeline from 316 B2B software and services companies. The headlines are sobering. Sales efficiency has dropped by 28% year over year. Deal values are down, win rates have fallen, and sales cycles are stretching. As Sam notes in the report, GTM success doesn't come from doing more. Instead, it comes from doing what matters consistently. Playbooks that reward volume and heroics are breaking, and with the costs of acquiring the right customers rising, discipline and execution is vital for future success. Today, we're going to discuss what's driving the decline and how most successful teams are using revenue orchestration to turn these headwinds into a compounding advantage. While we won't be going through the individual slides within the report today, we've got a separate session booked in with the Pavilion community on the 1st of May to go through the individual report dashboards and slides. And there's going to be a link in the chat if you'd like to join us for that session on the 1st. So without further ado, welcome, Sam.
Thank you, Guy. Great to see you.
So, Sam, before we jump into the numbers, when you look across the Pavilion memberships right now, what are you seeing is keeping revenue leaders up at night?
I think there's two things. The biggest is AI. Obviously, we're going to be talking about it today. I don't think you can get out of a conversation in the world, but particularly in go-to-market, without AI coming up. And the thing that leaders are concerned about, and literally, I was in a dinner in London on Monday with our Pavilion Gold community, which is CROs and CMOs and CCOs at 100 million and above revenue, and also managing and hosting a lot of conversations privately. Everybody is concerned about, are they behind? Are they ahead? Are they right in lockstep with where they need to be when it comes to organizational change for AI? And there's two and maybe three competing theories. One is, give everybody a Claude license or a ChatGPT license and tell them to run as fast as they can in some unspecific or non-specific direction. And in fact, we talk about that on this week's Top Line episode, the podcast that I host. The other is centralizing AI operations within even the go-to-market space, maybe taking one or two people, maybe somebody from revenue operations, and having a SWAT team, a very close team, a tiger team that's building and deploying either agents on behalf of the organization or some kind of AI-led initiative. And that's what Sendoso, a company like Sendoso, is doing, where Chris Rudigrap actually is co-CEO, and that allows him some benefits. And so one of the things is he's on one of these SWAT teams to figure out how they can deploy AI and agentic use cases in both in their GTM organization and more broadly. So AI is top of mind, and that's a very, very big concern. And then, it's interesting the data that we're seeing in this report, Guy, because the other thing that is top of mind is pipeline generation and demand. And I think, there are certain companies, and we know their names, and they're growing, parabolically. They're growing exponentially. They're growing incredibly quickly. Harvey and Legora, and obviously Anthropic and ChatGPT. So there's a series of AI native companies that are seeing exponential growth. There are also a large number of, growth equity stage SaaS businesses, and it's not quite the SaaS apocalypse. It's not that their businesses have disappeared overnight, but they are finding that growth is more expensive and harder to come by. And they're balancing, there's a conversation that I've seen on social media where people that don't really know what they're talking about are saying, the days of efficiency are over. We were talking about growth at any cost, then we were focused on efficiency, but now growth is the only thing that's important. And That's only true for a handful of companies. If you're growing more than 100% year over year, it's true. You probably don't have to worry about efficiency, particularly on a meaningful revenue base, 40, 50, 60, 70 million. But if you're not, if you're growing 30 or 40%, those businesses are not as valuable as they were a couple of years ago. And they do have to worry about efficiency. And it is a combination of growth and efficiency. And so I think that's something that we have to be mindful of because that is what people are struggling with. How do I spend this dollar in the best possible way to generate demand? And to the point, of this report, one of the big themes that I saw when I read the report, the big themes are if you just sort of scatter AI haphazardly and tell everybody, go do more. You might get more, but it's not going to convert. It's not going to be very high quality deal flow or opportunities. And you're not going to make progress. And in fact, you'll start to fall behind. The companies that are doing the best job are very intentional about their AI strategy. They're very intentional about their demand gen strategy. And they're very intentional about designing the system soup to nuts, start to finish, around the right inputs. And that, of course, begins with the right ICP and then it flows through to enabling the sales team, closing deals that are lost quickly and not lingering and holding on to them. All the things that we talk about, they're just as relevant today as they were a couple of years ago.
Yeah, I think that's very true. And what we're seeing when we looked at the data, and the report went live, what, 6, 8 weeks ago now. So, in an AI world, it's almost out of date already. But when we look at the data and the way that teams are enabling AI, we're seeing organizations that already had a broken go-to-market system, and they're pouring AI on top of it. And more often than not, they're simply using it to generate more leads. And the good news is you can generate infinite number of leads if you want to using AI. The problem is that they don't match your ICP. And if you've got a broken system, you're going to have to employ more and more sellers to deal with these leads that really aren't qualified, don't match your ICP, probably low deal values if you can even get them closed eventually anyway. And the output of that, we saw these organizations having to hire more, and the revenue per seller dropped last year by 25%. Um, but those that are using AI to actually, to improve the process, to improve the rigor, we now live in a world where all of the data is now available to us. We can see historically which personas we're engaging with to achieve certain outcomes. We can see historically the influence of how multi-threaded we are on deals. We can see historically when win rates drop to single digits when we spend so much time in a certain stage. And if you're using the data to build your benchmarks and to understand what good looks like, and then encourage the sellers to follow best practice, in those organizations, we're seeing revenue per seller rocket. And that comes from higher deal values and much more focus on ICP opportunities. So it's not the easy route, but those that are using it to get that rigor and process in place are the ones that we're seeing win. Those that are simply using it to just chuck more top of funnel onto effectively a broken system in the first place are the ones that are really suffering and aren't seeing the return.
Yeah, I that makes perfect sense to me. And I also think, one of the things that we talk about is data. And AI on top of a bad data schema, on top of bad information, is not going to make anything better. So the first thing we need, as with any process and work, we need solid foundations before we can pursue novel innovation through technology and process improvement. But none, it's garbage in, garbage out. If we have the wrong data, if we've bought a bunch of databases and they're disconnected and they're out of date, sending, lots and lots of emails to those people using Gen AI to write them isn't going to be very helpful, to your point.
Yeah, I think that's absolutely true. Now, we saw the delta between the top performing sellers within these organizations and the rest of the sales team grow even further beyond 10x last year. And we've all seen organizations that have relied on those kind of hero sellers that are the 10, 15, 20% of the sellers that are overachieving their number. I saw that in your forward, you talk a lot about kind of how heroics are probably dead and we need to focus much more on systems. So give us a bit more about that and what you're seeing in the market.
Well, pardon me to wax philosophical for a second, but fundamentally at the core, and I teach a course on P&L fluency with Pavilion. In fact, I just taught a live session of it yesterday in Amsterdam, which was great. But at the core, here's what we're trying to do in go-to-market. It's bigger than go-to-market. We're trying to deliver predictable revenue. Aaron Ross wrote that book, and he was right. And predictable revenue generates predictable enterprise value creation, right? So unpredictability is what markets abhor. It's what we abhor as leaders. The point that I'm making is the heroic seller is problematic for a number of reasons, but largely because it's that he or she is not repeatable, and it's disproportionate emphasis and undue center of gravity on one or two or three people. We're looking for repeatable systems that can drive repeatable, scalable growth. It doesn't do us any good to hit the number 1 quarter or 1 year and then have it be completely different, unforecastable the very next year. So I think, that's the from every level, in the world of AI, we have to refine and improve our process. Part of that is who we hire, right? We have to ensure that we're tightening our hiring profile and that the people that we bring into the organization as sellers are ready for AI and that we're enabling them to be AI productive in the right way. The second to your point, Guy, is you know, Mark Roberge wrote the sales acceleration formula. And what did he say? He said, you train people the same way, you hire the same kind of person, you train them the same way, you give them the same leads, and you have them run the same sales process. If you do those four things, you can drive predictable revenue. So that's still what we need to do. The best organizations are not relying on one or two people, because by the way, for better or for worse, this is the golden age for the top 1% of salespeople, right? The top 1% of salespeople and the top 1% of CROs there is greater demand for those people than there's ever been. So if that person gets hired away from your organization, how do you make sure that you don't miss the number or miss the quarter? You build a repeatable process. So that comes from your hiring profile, how you enable them. One of the things we saw in this report is that the best organizations have shorter ramp time because they're enabling people and they're using AI to, do live call coaching and to make sure that the CRM is updated and have automatic follow-up so that you don't have to take notes and, the email gets sent to the prospect right after you talk to them. Of course, again, it's not heroic to say we need to route leads to the people that can close that particular kind of lead the best. We also need to make sure that the leads that we generate are aligned with our ICP and that we're bringing people into the organization that fundamentally are going to renew, that are the right kind of customer. They're going to get value from our solution. So again, all of us as CROs, and you've been there, Guy, and I've certainly been there. We can live and die on the heroic salesperson. We see it a lot in customer success, actually. One of the problems with net revenue retention as an indicator of value is the heroic CS or account manager that gets a major upgrade. That's why we look at GRR, gross revenue retention, now as a bigger driver of value, because logo retention is the name of the game. And so, only to say we are in a world where systematization and repeatability are possible. So when something's possible, but the best people, or somebody's not doing it, they're going to fall behind. And the best organizations are looking for that level of predictability and repeatability.
Yeah, I completely agree with you. And when we see organizations introduce that level of rigor, that level of process, the speed in which they start to increase on their not just revenue per seller, but the sales efficiency within those organizations really starts to compound. And because if you've got everyone running the same process and doing things in the same format and sticking to the entry and exit criteria with every stage, and engaging with the right stakeholders and so on, it's a whole lot easier to make tweaks as you go. And it's not a magic wand, right? It doesn't happen overnight, but very quickly, in the same way, when there's challenges, the challenges compound on each other. Well, you can have a virtuous circle as well as a vicious one, right? So
Yep.
if we get this stuff right, quarter over quarter, we see time and again sales efficiency move up and up and up as we go, as the team start to build into that rhythm. But everybody has to work in the same format, and in my mind, this is the biggest thing that's leading to this churn of CROs that we're seeing. I mean, we've always joked about how fast, CROs, I think we're sitting at what, 17, 18 months at the moment. I don't know, what does the data tell us, Sam? And
Well, it was me really that popularized that 17 to 18 month. I should probably trademark that number because I know a lot of people have taken it. But I actually think the actual tenures actually shrunk a little bit. When we refreshed the analysis, I looked at my audience on social media and within the Pavilion community. The median actually is around 15 months, if you can believe it. And
wow.
I do think, listen, we're in a changing of the guard. We're in an era where the playbooks are being rewritten to the extent that they exist at all. And it's really, really, and the best leaders are willing to take that beginner's mindset and say, let me go back to first principles and figure out how am I going to design. And again, this is where centralizing the AI function is really important. The best leaders have built internal AI teams and probably did it 6 or 12 months ago, as opposed to right now. And so they're centralizing the learning. Guy, you talked about compounding, right? And how the right process can compound over time. And I think what I'm seeing is when there's an internal feedback loop of how to apply and deliver AI out to the field, out to the reps that are on the phone with customers, you get that same compounding effect of the benefits of learning in that virtuous circle. So I hope, the average tenure is a function of some of that transition, some of the people that are unable to make the transition. And unfortunately, there's also a market component. We have to be realistic about that. There's a market component, which is that certain companies are facing a lot of trouble. If you can believe, one of the high flyers in our space, Guy, for many, many years, I have people that worked at this company, was Medallia. And Thoma Bravo actually just wrote down their $6 billion investment as of this week down to zero. And that's a really big deal when it comes to SaaS. So there's a market component to some of what's happening. And then there's also what is in our control? Where do we have agency as revenue leaders? And we have agency in terms of thinking from first principles, trying to build repeatable process. And to your point, not relying on heroics.
Now, I'm a huge fan of community and I've always taken an active role with Pavilion. But for those revenue leaders that are listening in, I mean, obviously they get value from these reports that you produce. But how else is Pavilion helping the community and revenue leaders to actually be more resilient and get past that 15, 16-month line in the sand?
Well, there's a couple different places. The first is education, and that's where we have an AI and go-to-market school that's actually launching next week, where we're really trying to equip as many members as possible. And this is not abstract, and it's not slideware. It's actually hands-on keyboard. We have an 8-week program where every single leader in that program is going to be building things both in Claude and using other tools. So I think education is a really core component. We think that AI nativity is one of the features of one of the great operators. The second is P&L fluency. And again, that's courseware that I teach to help people understand. Guy, one of the most interesting things about these AI native companies is that we call them software, but they're not software in the traditional sense. And what do I mean by that? We think of software as having a variety of different facets, one of them being 90% gross margins, right? So it's very cheap. Ebsta's hosted in the cloud. If I want to become or Fullcast, I want to become a Fullcast customer. Fullcast spins up a new instance on AWS or Google Cloud, wherever you're hosted, and it's not that expensive. And you can deploy a new instance of the product very quickly. But AI has 50% gross margins, sometimes negative gross margins. Why is that important for go-to-market leaders? It means our unit economics change. It means that the LTV that we have to expect is different if we have a 50% gross margin versus 90% gross margin. So that's very specifically one of the ways that we're equipping our go-to-market community with the tools and the insights they need, because it was called software a while ago, but if you use the same word, it's not exactly the same thing. And then, of course, where is most learning actually happening? Most learning is actually happening in off-the-record conversations between fellow leaders. And that's what we do really more than anybody else in the world. We have our gold community where we're hosting private conversations every single day. We actually have small mastermind groups that we call small councils. These are groups of 6, 8, 10 people led by a facilitator that meet every 2 weeks or every month. And that is where a lot of the learning is happening. That's where I'm hearing from our members that they're asking that private conversation that they're not as willing to share publicly about how are you solving this problem in real life, in practice. I think there's a lot of great vendors in the go-to-market space that are just like we're doing right now, that are publishing content and hosting great events. But I think what's necessary right now is a steady dialogue. Who's on your group chat? Who's in your group text? That's what people need. They need a group of 6 to 10 people that they can bounce ideas off of that are facing the same challenges. And that is what, that's my passion. That's what we focus on providing.
No, I'm a huge fan, and I was at a Pavilion dinner just the other day, and again the way the conversations are orchestrated, and it's a safe place where people are able to open up about the challenges that they're facing, and it's amazing to hear the different conversations, and one revenue leader's biggest challenge is something that someone else dealt with last quarter, and has some value to add. So. And it was really interesting is it rings true in the data as well. I spend my life now within Fullcast. We've recently launched a new product we call Revenue Insights as a Service, and in essence, I take all of these data points around an organization and I present back and audit the whole go-to-market motion to the leadership team and show them how they're pacing against the benchmarks that we're reviewing today. And what's amazing is when we look at things like attribution, so top of funnel, where the deals are coming from, AEs are doing better than ever. The sales efficiency of the opportunities that they're self-sourcing themselves, we're seeing that the efficiency of those deals go up. We're seeing the other sources of opportunities that are generating efficient sales motions, our community, our network, and specific types of events, those in-person dinners and opportunities where you get to really bond with people. On the other extreme, we're seeing the old, events that you turn up and give away some swag and a bit of, some collateral. The efficiency of those leads, you get your badge scanned, and all of a sudden it's considered a lead. The efficiency of those leads has never been lower, and the same with BDRs. There's a real delta now between what the AEs are generating and what the BDRs are generating, and again, it comes down to this fact that they're not building relationships, they're not building a community, they're just trying to book a call and get a meeting in. And what's amazing, I spent a lot of time in the Pavilion Slack channels, and what's incredible is you've got like 12,000 members in this community living and breathing, and somebody who has never met me before might ask a question, and I might answer it with some thought leadership, or I'm thinking of looking at this product. Has anyone used it before? They've never met me before, but because I'm part of their community, part of their tribe, they'll take that knowledge and use that feedback from the community and consider it so much more, so much higher weighted than an article that they read online that was clearly written by a vendor. So I think in an AI world, community is going to become more and more valuable, and finding ways of engaging with people, and the old adage that relationships do still drive revenue, and in an AI world, it seems to be more important than ever.
I couldn't agree more. And I think the last part, the last thing you said, or the second to last thing, I think is what the lesson is, which is in a world of AI slop, in a world of, and I've even fallen victim to this myself. For a while, I was using an OpenClaw agent that I built to auto respond to comments on LinkedIn when I posted, when I make my posts. And I thought, well, everybody tells me you got to respond to the comments right away. So now I'm automatically doing that, except, of course, that you can instantly tell that it's AI. And there's a breach of trust there. And I stopped doing that. And I think trust is the word. Trust is the word. In a world of noise, we don't even know what videos are real. We don't even know what's being written by actual humans. I told my team internally, the first draft of every piece of marketing copy has to come without the use of AI. You can't just, because otherwise the construction is always going to sound the same. We're always going to see those M dashes. We're always going to see the same presentation. So the point is, what is the counter? What is the antidote to all of that noise, all of that sense that you're not even in touch with another human being? The antidote is community. The antidote is in-person experiences where you can build trust. And everybody's desperate for it. Everybody's desperate for it. When you get I was literally on a member call with a Pavilion Gold member. She's the CRO of a, $400 million business. We connected her to another Pavilion Gold member, also the president, effectively the COO, but she runs go-to-market for another business in a similar space. They'd never really met. They knew of each other, but they'd never really met. They instantly brought their product teams on the phone. They're talking about a multi-million dollar partnership. That's what happens when there's trust. And so for the lesson for anybody listening is and I have to, this is a lesson for me. I'm not better than anybody that's listening. Every action that you take either supports and increases trust or decreases trust. Every time you send a poorly written AI generated email, you erode trust. Every time you shake somebody's hand, look them in the eye, and do what you say you're going to do and really help collaborate on building a solution for them, you gain trust. And trust is the currency of the modern era, as it always has been.
Yeah, I love that. And we see it ring true in the data as well. The efficiency of those motions is really key. Um, and we're seeing, the more innovative businesses are really working closely with the whole go-to-market motion. So we're seeing much more 360 action from the sellers. So rather than just being
Right.
kind of single-purpose vehicles and they keep handing the customer over from one to the next, the sellers that are generating their own opportunities, they're running their own sales cycle, and the leadership team are allowing them to retain access to that customer to continue to cross-sell and upsell more and more, means that they don't have to sell them the whole deal out the box. And that motion is really starting we're seeing over 50% of the sellers that we surveyed through the report are now considered themselves full cycle. Doesn't
That's
necessarily mean
great.
they're doing all of their own top of funnel, and they're certainly not owning the accounts after they're signed from a technical implementation and activation perspective. But they do maintain access to the customer, and the customer maintains access to them, certainly with any commercial conversations and helping the customer to get more and more value from the platform.
I think I would underscore that this is a really exciting moment to be a great seller and a great leader. And there is a value proposition that you can make to management to say, we over specialized. I don't know if that's controversial to say, but in a world of very structured workflow systems, like all of our old SaaS products, it made sense that one person used this tool and one person used that tool, and there was a handoff along the way. But there's a world now where, to the point, you can be a full cycle rep, supported by or orchestrating some level of AI, either agentic support or just the number of people that you need supporting you in order to get the conversations that you need is less. There's an argument to be made that, hey, I will save the company money and you can pay me more. And I can, if you're a top 1%, AI native seller, you can say, you don't need all that infrastructure. Give me this level of infrastructure, including, maybe you don't need a BDR, maybe you don't need a CSM. I'll do it all. And, I won't take all of the money that you save, but I'll take a portion of it. And I think there's a world where a small number of people really increase their OTE and increase their earnings if they can adapt to the new environment.
Yeah, it's fascinating. I'm looking forward to hearing those conversations, but and see how they
It doesn't
go.
always work, but certainly there was someone that said, there was like a loss of four AEs, and they hit the number. I was literally in Amsterdam yesterday talking to one of the best sales leaders in Europe, over a coffee, and he was saying he was supposed to hit the number with 10 people for a bunch of different reasons. They only had four. They still hit the number, and I said, well, maybe maybe that increment goes to you in some way. So, not trying to cause any problems with CEOs or founders out there, but I do think we should reward our top performers.
Well, and certainly give them budget to be to join those communities, to be at those dinners, to have the opportunity to meet and engage with more people face to face. I think we know it yields results. The data tells us consistently, and if you can, if certain channels are not working anymore, if you don't need to be at those big conferences because just giving out flyers and focus much more on building those relationships and investing that time and energy in that, we see it yields the results.
Yeah, 100%.
So other areas that we saw from the report that are really, really fascinating for me, we saw a big uptick in revenue coming from existing accounts. So in fact, from the data, what we saw is that 52% of new revenue last year didn't come from new logos; it came from expansion. But we think that from what I can see, a lot of businesses are still leaving money on the table when it comes to existing accounts. And one of the really interesting data points was looking at which personas the success teams are maintaining engagement with after the deals are signed. And again, knowing that those relationships drive revenue, we saw accounts where they're maintaining engagement at the C level before the renewal is leading to a 7 times increase in open opportunities to cross-sell, upsell with a 45% win rate,
Wow.
which is much greater than new logo.
Yes.
But if they don't maintain engagement at the C level, we're seeing that the potential for churn increase 4 times. But it feels like all the revenue for go to market, all of the expense for go to market is thrown into, or all the costs are thrown into new business and new logo, and it feels like a lot of businesses are leaving money on the table within existing accounts.
I think some are. I mean, I've also talked to a few customers and companies to the point maybe on the right side of that 52%, where I've talked to some companies that haven't sold a new logo this year. that are still growing 20 or 30% because they are expanding their existing base. A lot of these are legacy SaaS products that aren't particularly innovative. They don't have a bunch of new pipeline coming in, but they are focused on existing accounts. I'll tell you the other place where we see incredible net revenue retention and expansion is some of these AI native companies. One of the cool things that we're doing within Pavilion Gold is actually we're bringing the opportunity to invest in some tier one companies to our members. For a long time, access to making investments in SpaceX and Anthropic was privileged for the very few, but we're bringing some of these opportunities to our customers, to Pavilion Gold members. And one of the companies we looked at was this company called Dust. And Dust is an operating system for AI agents that's a horizontal application. And their net revenue retention, their instant expansion, they start with a small pilot, but because there's a usage-based component, they see crazy numbers on NRR. They see 200%, 300% as they get adoption. And then once you get adoption at the agentic layer, if you've got any kind of consumption or usage-based pricing, this is where I think Jason Lemkin and Amelia said their AI bill was $500,000 this year. This is where you can see some very meaningful bills. So, I think the lesson is as true today as it was 15 years ago, which is you paid so much money to get that new logo. You got to keep it. You've got to keep it. You've got to make sure that they stick around. Every dollar that you invest in onboarding, every dollar that you invest in implementation, and certainly I think incentives matter a lot here. To the point, Guy, I think the teams that listen, again, I teach P&L fluency. I teach, so much about the capital markets to our Pavilion members. I teach CRO school. What is the lesson of all of the things that I teach when it comes to our ecosystem? No surprise. Retention is the biggest driver of value. If you cannot retain your customers, you cannot be a successful company, period, full stop. And so you have to align the incentives around retention. And the best companies, as evidenced in the report, have those customer success people, those sellers that maintain the relationship, that is not just throwing it over the wall and hoping somebody catches it, but really saying, one of the things that the bow tie teaches us and that, all of the mutual action plan, softwares teach us, and the concept of a mutual action plan, they teach us that signing the deal is the endpoint for you as the vendor, but it's not the endpoint for the customer. Signing the deal is the beginning for the customer, right? That's the beginning of their journey. We have to remember that we're in the business of delivering solutions to people, not necessarily just selling software.
No, I absolutely agree. And those teams that are aligned to outcomes are the ones that are winning more.
Yeah.
And it's going to become more and more apparent as we move. We see, I spend a lot of time with PE-backed businesses, and I think all of them, without exception now, have got some level of consumption-based pricing. And it
Yeah.
might not be kind of based on individual credits yet, and it might just be buckets because they're trying to get the customers used to it. But the data is saying that that if you're truly delivering value, then aligning your pricing to the value that you're delivering will yield better results for you and for your customer. And it's consistent across the board.
100%. I've seen a lot of pricing data recently. I saw it from our partners at SBI. Literally, the previous call I was just on was with Marcos Rivera from Pricing IO. The fastest growing companies are using a combination of platform plus usage-based pricing. There's nobody that's, if you just went all in on consumption, buyers don't actually like that because there needs to be some level of predictability to their budget. But if you just stayed with, no changes, and all you are is a seat-based pricing model, you're also not growing. The companies that are growing the quickest have a combination of some platform fee, some level of access, and then some predictable usage-based model. Those are the companies that are breaking apart from the rest of the pack.
Yeah, 100%, 100%. So as we come towards the end of the session here, I'm wondering, Sam, if there's a CRO watching today and wants to take action off the back of this from these benchmarks, is there anything in particular that you would get them to focus on? I know I've got a few I'd get them to focus on, but where would you encourage them to
Well,
focus their time?
some of these, again, well, sure. So the answer is yes. I have some recommendations, but they won't sound like rocket science, but I'm reminded, I have a coach and we always read these self-help books and they all say the same thing, but sometimes a message lands when you need to hear it. So maybe somebody out there needs to hear what I'm about to say. The first thing is you need to focus on your ICP, and focusing on your ICP is not as easier said than done. Everybody nods, but it means that there have to be some customers that you're willing to say no to. And you have to really understand what are the customers, and this is very clear in the report, right? The customers, the companies that focus on the customers that derive value grow significantly faster than the companies that just let anybody in. So you got to know your ICP. The second thing is, there's this pipeline weighting, right? That was a big conclusion of the report, that a balanced pipeline is better than a bloated pipeline. So how do you have a bloated pipeline? Well, this has been true for as long as we've been selling, Guy. You have a bunch of sellers that won't close lost a deal, right? And so we always know that a close lost deal takes 3 times or 4 times as longer as a close won deal. The discipline, because it's the discipline of focus. So if you can be tight on your entry and exit criteria and what makes a good opportunity, then you can focus on the deals that are going to win. And what's important about that? Because the deals that are going to win, you can actually expand their deal value, or you can line them up to expand over time. Another conclusion from the report: lead routing. Now, I thought this was interesting that there's some ability to route leads to a specific kind of lead to a specific kind of seller that's more sophisticated than just SMB versus enterprise. I haven't seen that in practice, but if that's a capability out there, that's really, really interesting. Obviously, my take on it has always been a bit simpler, but still the same idea, which is route your best leads to your best sellers. It's a more sophisticated iteration on that. But every time you route a good lead to a seller that can't convert that lead, you lose on two fronts. Even if they win the deal, you lose on the deal size and you lose on the close rate itself, right? You have a higher close rate at a higher average deal value, which I'm sure shows up in our beloved sales efficiency, which we know is very important. So those are the big things. And then the final thing I would say, I was just flipping through the report before we jumped on. And what did we see? That six SDRs that managed to integrate 6 different stakeholders in the sales process, or salespeople, multi-threading, again, not rocket science, but if you get 6 or more, and I remember reading The Challenger Customer, the sequel to The Challenger Sale, where I think it was Matt Dixon, but the guys that wrote it were saying sometimes it's 11 to 15 different parties. And I think that number's expanded. The point is, we are living in a world, especially if you're not AI native yet, where the buying committees are going to be preferential to AI. If you're going to win that deal, you need to be multi-threaded across the C-suite, across the implementation teams. It's not just, one champion or one economic buyer. You're going to need a committee of people to support you, and you're going to need a sophisticated sales process to help you do that. And I know Fullcast helps with that.
Yeah, we certainly do. We do the lead routing you were talking about as well, and lots of other things. But look, I agree with what you're saying. That when we looked at the data, I suppose my takeaway for CROs that are listening in is, first of all, be cautious of the volume cohort, right? Using AI to generate infinite number of volume is fine as long as you've got a rock star system that filters out the 90% that aren't relevant early enough so that the sellers aren't distracted. If you don't, then it's not the play. And those that did that route, we saw the revenue per seller drop 26% in the year. So focus on rigor, focus on process. We saw 59% of deals was on average was skipping stages in the sales process. So of all the customers we went into, just over a third of them are sticking to the sales process they've got, and 2/3 are going the other way. Right, so they're allowing the sellers to skip stages and to jump from one to the other. No real rigor and process around entry and exit criteria. So our role as leaders is to introduce a playbook, a best practice, and to make sure that they stick to that best practice as they go, because we know how to help them win. Unsurprisingly, we also saw that the larger deals are the ones that are the most sales efficient.
Yeah.
So moving up market and focusing on the larger deals are the ones that are going to move the bar for the business. And I made that mistake myself. We live in that revenue intelligence space, and we were doing great guns in the Salesforce ecosystem. And as HubSpot was coming out, we thought, great. And I invested $1 million in building out our revenue intelligence platform to work for HubSpot customers. And that integration works fantastically. Okay. But my sales team got distracted. They were working on tiny deals that were converting. But the reality is the impact we can have on a company that's got 5 sellers is relatively limited. But if you've got 20, 30, 50, 100 sellers, that's how we can help you. And guess what? The majority of those customers are using Salesforce, not HubSpot. And it took us, we had to take a real hard look at the money we'd spent, and we made a conscious decision to stop that motion. In fact, all we did is stop paying commission on those HubSpot deals. And all of a sudden, we got much more pipeline focusing on the larger Salesforce customers. So It's hard to turn away business, but when you look at the data and understand where the efficient deals are, and as you said earlier, it's all well and good being responsible for hitting a number, but if you're not, if you don't, you absolutely as a commercial leader need to also have some level of visibility of what a good customer looks like. So it might be that actually winning a customer at a small amount serves you because within 6 months you get to expand that account. So understanding what a good lifetime value of a customer looks like and cohorting the customers not based on what they spent initially, but what their actually capacity to spend with you might be, we've seen is a big step forward. And as you talked about ICP, we saw a misalignment with ICP reduces win rates by up to 75%. Okay. And so not knowing what your ICP is or not addressing it, we saw nearly 2/3 of CROs are reviewing their ICP definition either once a year or less. Now, this should be a living, breathing document, and it's not just what industry or market are we in, but where are they in their investment cycle, right? Have they just replaced senior leaders in their business, or have they been there for a while? Are they about to have an exit or a fundraise? All of these things can influence whether an opportunity falls into or out of ICP during the sales cycle. And our role as leaders is to help the sellers understand what true ICP looks like and really try and keep them within those guardrails as best we can. So,
100%.
in simple terms, systems and process. Stop
Yeah.
with the focus on the heroics. Systems and process. Follow the best practice of what those top performers are doing, but let's get more of the sellers doing it. And it's our role as leaders to enable those sellers, and rather than just blaming them for not hitting their number.
Yeah, and obviously, acknowledging the conflict of interest in what I'm about to say, but I don't, attending webinars is great, but it's not enough. You need a peer group. You need a peer group because how you do these things is stage specific, is industry specific. Every company is unique and different in certain ways, and you need to find peers that are solving the same problems. And that's why I do think community is more important today than it's ever been. And I think if you're trying to go it alone, I think you're making a big mistake.
Yeah. Well, I'm a fan and a long-term member of Pavilion, so
Yeah,
I agree
I'm a
with
fan of yours, Guy.
that. So looking ahead, what's your prediction for how AI is going to change go-to-market roles and team design over the next 12 months?
Oh, well, um, here's what I think. Listen, I think middle managers are in trouble. That's what I think. I think all of us are going to be looking for smaller teams. I wrote about this in my newsletter, which comes out every Sunday. I'm thinking about calling it Sundays with Sam. Tell me what you think about that, audience. But
I
anyway,
like it.
the point is, if you assume that the role of a middle manager is a communication layer partially, right? There's reps in the field taking market intel, taking data, and doing things. And then the role of the manager is to flow that information up to the executives to make decisions. And then the middle manager translates those decisions back down to the front lines so that you can execute those new plans, those new tactics. Well, I think that role is being compressed, is feeling a lot of pressure. And I think there's going to be AI is going to, and this is what Jack Dorsey, this is how he's redesigning his company Block. I think the future of go-to-market is a small number of, I think you are either great at talking to people, as I mentioned earlier, shaking their hands, looking them in the eye, attending one of these dinners and being in the room as a peer, even if, you're younger, but being great at customer service, being great at human to human interaction. You're that, or you're an orchestrator of agents. You are somewhat technical, not necessarily purely technical, but you are capable of looking at a dashboard and being the puppeteer behind the scenes that's pulling all the strings. The person in the middle that is, that's the second line manager. The second line, I think second line managers are in trouble, and I think there's going to be a distinction between the companies that are doing the right things, like we've talked about, and the companies that are not. The last thing I will say, and the thing I'm most interested in, I think the TAM has never been more knowable. Everybody's TAM, it is possible not just to have a slide that says, there's 200,000 HVAC repair people in the United States, but it is possible to say, and this is who they are. Jerry lives in Sandusky, Ohio, and Frida lives in Phoenix, Arizona. It is possible to know your TAM down to the decimal point. And any company, including mine, as we've talked about a lot, Guy, any company that doesn't have that information or that data, this is your signal to go get it. because it's possible. Kyle Norton drove exceptional growth for owner.com past 100 million in ARR for an SMB business selling to restaurants, right? That is a very hard, expensive sale traditionally. But he did it because he had the best database of restaurant owners that exists in the world for his industry. And his connect rates for cold calling are higher than anybody else's connect rates in the industry. That comes from great data. That comes from he knows exactly who every restaurant owner is, and they're growing faster than all of their competitors.
Yeah, I absolutely concur. Your data is the liberator at this point. And every company we talk to that says, "Well, my data in Salesforce isn't great, so I can't get to the insights I need, and then I'm not getting the reports I need, and I can't hold people to account because of it." AI can solve all of this for you. And there's many vendors I'm sure in the market, but Fullcast we have an engine that can fix all of your data hygiene issues in Salesforce, and we deliver these revenue insight reports that are really transformational and bring the whole go-to-market team together and align the team to focus on what the top performers are doing and get everybody to lift up and hit their quota. And we plenty of case studies that we're having that big impact. So yes, definitely buy into that. Now, if anyone's listening wants to actually get a walkthrough of the report itself, we're doing that with Pavilion on the 1st of May. I'm going to drop the link there in the chat. Please sign up for that. Pavilion's opened that up for non-members as well. So we're going to be doing a detailed walkthrough of each of the insights in the report. So looking forward to that on the 1st of May. So Sam, if anyone wants to connect with you after this, how do they go about doing that?
Oh, very easily. I create a lot of content, Guy. So if you want to hear more without talking to me, a lot of people don't want to talk to me, but they want to listen to my podcast. So that's Top Line. You can find that anywhere you get your podcasts. Or you can just email me, sam@joinpavilion.com, and I'll happily respond. If you're a member of Pavilion, you can send me a direct message through our electronic messaging platform. It is Slack, but it is our electronic messaging platform. But anyway, you can email me, you can listen to the content. You can find more on our website, or you can message me on LinkedIn any way you want. I'm pretty easily findable.
Very good. Well, Sam, thank you so much for joining us today. It was a great session. Pleased we had the opportunity to go through the data. Yeah, looking forward to seeing if those predictions come true.
Thank you very much for having me, and I'm a huge fan of Fullcast. I hope everybody becomes a customer. It's a great platform.
Thank you very much. Take care, everyone. Thanks a lot. Bye bye.